Hello everyone. How are you all? Let me just check if I'm live. Hello. Hi everyone. I hope I'm audible and visible to you all. Please do confirm me. Hello. Hi everyone. I hope I guess it's working. Let me just check. Yes, it is. Please do confirm. Okay. Hi Utkarsh, hi Gautam, hi, how are you all? Sorry, I was planning to take the class today, but I forgot to schedule the stream, so you guys may or may not have gotten the notification for it. So first of all, how are you all? How was your Raksha Bandhan? Did you celebrate it? How was it? Hi Pooja, hello. So good to see you all. So just for the sake, for waiting for the people, I'll just talk with you all for some while and then we'll start with today's class. So first of all, how are you all? Pooja, Utkarsh, Gautam, how are you all doing? Did you revise the previous class? I'm good, Gautam. Thanks for asking. Did you revise what we did in the previous class? If yes, should I ask you some questions? Shall we have a small Q&A round? Are you ready? For those of you who have not joined the previous class but are here, are you up for some question and answer round? Okay, I'll just add a poll. Let's see. I'll ask a question in the poll. Okay, so I'm putting up the poll for you all. Tell me that what is the correct answer. Let's see. Where does the entire class stand? So my question for you all is, bank account is real account, personal account or a nominal account? Okay, we have one vote for personal account. Pooja, Gautam, what are your answers and the 6 others who are watching this stream at this moment? Yes, tell me. Real account, personal account, real account. Someone is changing his or her answer. Real account it is. Okay. Others, tell me. Give your answers. Give your answers in the chat box also. Just like Utkarsh has given. Fast. We have to start the class also. Gautam says personal account. Okay. Why are people calling it as a personal account? Why? Okay, people are changing the answers. Why? Stick to one. So we have a majority for personal account, but give me the reason why. Yes, tell me. Why is it so? Come on. Yeah, you all gave me the answer personal account. I guess Pooja was the one who gave me the real account. Give me the reasons. Why is it a personal or why is it a real account? I want the reasons. So we have 5 votes now. Majority is saying personal. I want the reason. Why? Don't Google it. Don't you dare Google it. Give me the answer. Real account because it's an asset. Okay, Abhi. Alright. So people who have given their answers as real account, do you agree with Abhi? Pooja is saying personal. Why, Pooja? Give me the answer. Why? Utkarsh, Pooja, Gautam, you all said personal. Why? Because it's related to individual. See, bank account, when it comes to bank account, we treat it as a separate person, okay, as an individual, and hence the account that we allocate bank account to is a personal account, not a real account. Although bank is an asset, but we treat it as a individual. Alright, hence whenever it comes to bank account is always treated as a personal account, and and we also assume that bank is acting for us as a person. Okay, so he's receiving the money and giving out money for us. Hence the personal account is used to bank account is treated as a personal account. And what is the golden rule for a personal account? Tell me that. What is the golden rule for a personal account? Tell me. Golden rule for a personal account. What is the golden rule for a personal account? Guys, I'm waiting for your answers. I'm waiting for your answers. Come on. I didn't teach you that bad. Come on. इतना तो मैंने पढ़ाया था. Yes. Debit the receiver and credit the giver. Alright. Guys, it's important that you revise whatever I've taught you, right? So, please make sure that whatever we have done in the previous classes, you are well versed with it. Alright, and you are well practiced as well. Okay. Nishant is saying debit all expenses and losses, credit all incomes and gains. Nishant, tell me the correct answer. This golden rule is related to which account? Nominal, personal or real? See, the line, the rule itself says debit all expenses and losses. Hence, this is related to nominal account. Okay? Yes. Very good, Abhi. Very good, Gautam. Alright. So, let's start with today's class. So, today's class is a continuation of previous class, right? So, in previous class, we talked about balance sheet. So, we saw how the balance sheet works and what is the equation on which the entire balance sheet is working. The entire balance sheet is changing, right? So we saw an example also where we saw current assets, non-current assets, total assets, followed by liabilities, again current and non-current, then stockholders equity section, and we have the same balances for asset and liability and stockholders equity section. So this was our entire balance sheet. Then I talked about small topics. First, that what are unexpired cost, what are expired cost, then what is the net concept, what is the gross concept, and what is the accrual accounting, and what is cash accounting, right? So let's take up some examples. So today we are going to cover income statement, and we are going to cover comprehensive income statement, right? So these are the two statements, that is the agenda for today. So let's start with a few examples. I want you all to be extremely active in the chat box, and I will be more than happy if you are active in the comment section, not in the chat box, because that's another way of commenting, and I will be happy to see your answers in the comment box as well. Alright, so you can use either way, chat box or comment box, but I will be more happy if you comment. Okay, so let's take up the first one. So the first question here is, you have to give me you have to give me that is it a current year expense, or like let's say this question, this is the first one. So you have to tell me what is the current year expense or income, and also you have to tell me what is the previous year or future year income or expense. Alright, so in this year, let's start in the current year. So we have a company, Manvi Incorporation. My company deals in goods and services both. Alright, now in the current year, I have received rent of $2,000 per month paid for 24 months. What do you think? What is the current year expense and what is the future year expense? Tell me. What is the current year expense and what is the future year expense? And those of you who are thinking that I will not read your comments immediately, I am reading your comments immediately. I am having the software for it. Okay, so if you are active in the comment section, that will work as well. Yes, tell me, answer me. What is the current year rent expense and the rent income, and what is the current year? In the current year, Sana paid 40,000 advance for the next year's services. In the current year, rent of 2,000 per month paid for 24 months. So it's an expense, rent expense. Okay, so you have to tell me what part of the rent is a current year expense and what part is a future year expense. So I'm getting answers like nominal, non-current. Guys, you have to tell me the amount. You have to tell me the amount. Come on, tell me the amount. Gautam, I know it's an expense, but how much? I've given you the numbers. Okay, Nishant says current year expense 12,000. Okay, and what's the future year expense? Very good. So 12,000 is related to current year. So I'll make one table: previous year, current year, and future next year. Okay, so current year expenses $12,000. How did I get this $12,000? It's 2,000 into 12 months. Okay, sorry, it's 2,000 into 12 months. Guys, the current year expense will be $24,000, not $12,000. Why are you saying $12,000? Okay, and for the next year it's going to be $24,000. So people who were saying 12,000, yes, did you get it? It's going to be 2,000 per month into 12 months. Yes, it's 24,000, not 12,000 for future year. Is it clear, Utkarsh? Nishant? Yes, good. Okay, give me the answer for the next one. In the current year, Sana paid 40,000 advance for the next year's services. Tell me. So I am giving out, remember, I am giving out goods and services both. So I have received 40,000 advance from Sana. So tell me, what is this? How will I treat this? Gautam, it's going to be $24,000, not rupees, because here we are studying US CPA, FAR. Okay. And also, guys, there's going to be a little inconsistency in the videos, and this will go on for like a week or 10 days. Then after that, I'm going to make sure that I have a proper pattern for uploading videos and lives. But for one week or 10 days, just bear with me, because if for some personal reason I won't be able to take the classes as frequently as I am planning to do. But yes, after a point, like after 10 days, I will make sure that I make this a daily or a alternate day thing. Alright. So my question was, in the current year, Sana paid 40,000 advance for next year's services. Guys, why aren't you giving me answers to such a simple thing? So like if you're doing CPA, I'm assuming you have done undergrad. I'm assuming you have graduated your 11th and 12th class. Come on, guys. In the current year, Sana paid 40,000 advance for next year's services. So what is the amount that I will treat as an income for my current year or next year or previous year service? Tell me this. Utkarsh says future year. Okay. What about others? What about others? Current year $0 and future year $40,000. Okay, this is Utkarsh's answer. Very good. What about others? So I'm giving out the answer, guys. I cannot wait so long. Otherwise, people who are watching the recorded version, they will skip the videos. Okay. So I'll start with answering the question. So current year income will be 0. Why? Because this 40,000 advance is 100% for the next year services. Hence, this is an income for next year services. Next, rent to landlord not paid yet for the year 2023-2024. That is your current year. So tell me, so this rent to landlord not yet paid, what is this? My question here is not the amount, not the year, since I've already given it in the question. My question here is, what is this? Rent not paid for the current year. So firstly, what is this? And secondly, is this a current year expense or not? Yes, Gautam, the service is a next year service, but it's paid in current year. So that's why since the service relates to the next year, we are going to treat it as an income for the next year only. Because Gautam, we understood the accrual basis of accounting. in the first and second class? Yes, that's why it's going to be a next year income. Now Gautam says there is nothing any paid, so it's going to be outstanding expenses. Very good, Nishant. And is it going to be a current year expense? Very good, Gautam. It's an outstanding expense. Utkarsh, it's an expense. Yes. Is it a current year expense? Utkarsh says it's a previous year expense. Why is it a previous year expense, Utkarsh? So I told you that I have not paid for the year 2023 to 2024, which is my current year. Okay, this is my current year. Treat that as my current year. Now tell me your answer. Is it a previous year expense or a current year expense? It is a current year expense. Why? Because it's outstanding in the current year. Okay, we used the premises in the current year itself, and we did not pay the rent for it. Hence, the expense is related to current year itself, right? So this is my current year expense, whatever it could be $5,000. Next, Ravi had taken services last year but not yet paid. Tell me, how will I treat this? First, tell me, is it an income or an expense? Second, tell me, it relates to which year, that income or expense. Okay, and third, tell me, what is it called? Okay, Pooja is saying prepaid expenses. Guys, Ravi had taken services last year and he has not yet paid. That means he has taken services from me. So this is not an expense but an income, service income. Okay, so I will correct all of you, Shifa, Pooja. This is not an expense but an income. Now tell me where. Now tell me, is it what type of income is it, and which it relates to which year? Okay, tell me. Yes, come on, guys. Is it an accrued income? Is it what is it? It relates to previous year. Very good, Gautam. Very good. That how did he got this? So Ravi had taken services last year. So since the services were taken in last year, hence the income is related to previous year. And since this is related to previous year, hence this is known as an accrued income. What is an accrued income? Income earned but not received. Is it clear to all of you? Is it clear? Income liability. Why did you say, Nishant, income liability? This is not a liability. See, you have to understand one thing. If you have given your services, if the company has performed its part, okay, and they have not received the payment for it, so it is not a liability but an asset. But let's say my company has received an advance payment. Okay, I have not yet performed my services, or I have not yet done my part. The company has not done its part. So what will it be? It will be a liability, because my company has a obligation to perform in the future. Okay, so this income, Nishan, is not going to be a liability but an asset. Okay, this is an accrued income, earned but not received. So it's going to go where? In my accounts receivable. All right. Yes. Okay. Chalo. Let's move forward. So today's topic, let's come to the main topic for today, that is your income statement. So first example that we have, so I hope you all know what is an accounting cycle. I hope you all know what is an accounting cycle. What is an accounting cycle? See, first we identify certain transactions, that these are the transactions that I have to record. These are the financial transactions that I have to record. Okay, so this is your first step. Then second step is you actually record the financial transaction. So where do you record? How do you record? In your journal folio. So you make a journal entry for the identified transaction. Second thing that you do is, after transaction, what you do, you after journalizing, you make ledgers. Okay, you post it in the ledgers, separate ledgers. After those ledgers, you get certain balances at the end of those ledgers. All right, so after getting those balances, what you do, you post it in the trial balance. Right, now comes the tricky part, where we have certain suspenses created, that the trial balance is not reconciling, the debit and credit balance is not reconciling. Okay, so now we have a suspense account, so we have to see that which all accounts have some errors or need to be adjusted. Okay, so we start with this identification process. So after this identification process, we go ahead and we tell our accountant to please go ahead and make the adjusting journal entries. Okay, so after this entire process is done, we go ahead and we make our financial statements. So once the financial statements are made, what are the financial statements? Your statement of operations, statement of financial position, statement of cash flow, then your statement of comprehensive income, and statement of stockholders equity. Okay, so when these 5 statements plus the notes are made, then we go ahead and we close our books and everything. So this is known as your entire accounting cycle. Okay, so from recording to summarizing and then eventually communicating. Okay, this is your accounting cycle. Utkarsh is saying operating cycle. Operating cycle is different. Operating cycle is, we start with a certain cash balance, we invest it, we create, produce finished goods, we go ahead and sell it, then we have certain debtors who are yet to pay me, then we get our money back, the invested amount is returned to us. So this entire cycle is known as a operating cycle. But what is an accounting cycle? From recording to our communication. Alright, so that is an accounting cycle. I hope firstly this is clear to you all. What is the difference between an operating cycle and a accounting cycle? Is it clear? Is it clear? Yes, come on. Is it clear to you all? I hope I'm audible to you all. Alright, so let's move ahead. Now we have a trial balance. So the next step will be now, and I can see that there are no suspenses. So my next step will be to make my statements, all of my statements, and my today's agenda is to make an income statement. Now in US GAAP, we have 2 types of income statement. First is the multiple step income statement, and second is a single step income statement. So let's go to the first one. So why is it known as a multiple step income statement? That is because at each step something or else is revealed. Okay, it could be gross margin, it could be your income or loss from just your core operations, then it could be your total other revenues and gains, other revenues, other expenses and losses, then income before income tax, then income tax expense, then income from continuing operations, and so forth, so forth. Okay, so these are the certain steps that you are able to see in a multiple step income statement. Now what we are going to do, we are going to take the we are going to go ahead step by step and understand this entire income statement. Are you ready to see this? Are you ready for this? Tell me. Okay. Now let me tell you one thing. Let's do a small activity. So just so I know the names of all of you, I want you all to name yourself and tell me that yes, I will be a regular student in all of your classes, and I'll make sure that I remember all of your classes. So this is just a small activity so that I know your names, and also we have like a short break before I go ahead and start with all of the small topics in income statement. Okay, just write it in the chat box or in the comment section that I would and I want to be your regular student in all of your classes. Come on, guys. I guess there's some lag in the live chat. Okay, so Utkarsh is the first one to comment in. Thank you so much, Utkarsh. Where are all of you? Gautam, Nishant, myself, Charan. Okay, hi Charan. I had a word with him today. He used the calendar to talk to me. So people who don't know this, I have this provision in that you can see in the description, where you can see that there's a Calendly link. So if you want to discuss any doubt with me, or discuss any CPA plans or anything, you can go ahead and book a slot. And so booking the slot on the Calendly is the first step, and second step is messaging me on the Instagram that this is my email ID and I've booked the Calendly for this date. Okay, so yeah. Okay, so Shubham is saying you can also start teaching for class 11 and 12. Yes, I hope so. One day I will do that as well, but for now I'm focusing on CPA only. Okay, thank you so much, Pooja, Charan, Shubham, Utkarsh. Alright, so let's start with our income statement. So first thing that we are able to see is net sales. What is net sales? Basically all the sales minus all the discount and returns. Okay, so net sales is all the sales related to your goods, related to the services, related to, let's say you have a business where you earn rentals, so related to the rental income. Okay, so it could be so when you add up all of it, after deducting your discounts and returns, you get your net sales. Now what is the cost of sales? So to understand this, I am going to give you an example. See, let's say I have a Manvi incorporation and my business is to manufacture cars. I am manufacturing cars. Alright, so this year I made a sale of 45 lakhs. Okay, I made a sale of 45 lakhs. Now, in order to make one car, I incur 20,000 related to the tire. Tire costs me 20,000. The body, the structure of the car costs me 80,000. Then the glass for the windows, for the back, in the front, all of it costs me around $10,000. Then the engine itself costs me around $150,000, and the body requires polishing and everything, and the finishes that costs me around $5,000. So it takes $265,000 to manufacture that car. Alright, and let's say, assuming that I have like 10 cars, alright, so I have a costing to manufacture those 10 cars as 265 into 10. Okay, so that comes out to be 2650. Now this is the cost of raw material itself. Then there is labor that is working on the production of that car, so that costs 50,000. And there's overheads also, like direct overheads related to the production of that car, that is 1 lakh. So the total cost of manufacturing that car comes out to be 28 lakhs. So this is known as the cost of sale. Okay, so basically all the direct costs that is related in order to procure any good or to manufacture any good is known as the cost of sale. Is it clear what is cost of sale? Yes? Now, after getting my cost of sale comes my gross margin. So after I take up the net sales, I reduce the cost of sales from it, and I eventually get my gross margin. Right? Now comes the indirect expenses. Alright, so my indirect expenses are the selling expenses. What are selling expenses? Let's say I am paying any advertising expenses, I am paying any commissions to the sellers, to the salesperson. So all of these are selling expenses. Then there are general and administrative expenses, the officers working in the company, the executive managers working in the company, the accountants working in the company. Okay, so these are all the general and administrative expenses. Now why were these not included over here? Why? This is because here we are taking up the costs that are related directly in the production or the procurement of that good or service. Alright, but here it's the these are related to the core operations, that is for sure, but these are not the direct costs. Is it clear the difference between the cost of sales and your these selling expenses, general expenses? Is it clear? Okay, now let's move ahead. So another expense that we are going to take into consideration is the depreciation expense. So I told you depreciation expense. What is a depreciation expense? Let's say I have purchased any asset. Now that asset is going to serve me over the years. Okay, so let's say it has a life of 10 years. So it's going to serve my company for a period of 10 years. Now it's not right that I expense the entire amount in the year I have purchased, right? It's not right to do that. Hence, what we do in accounting, we capitalize this depreciation in our books of accounts. Okay, so we will be able to see in the balance sheet that we have this certain asset, right? And over the period, over the life of that asset, we are going to expense it. And how we are going to expense is using this depreciation. Alright, so after calculating the gross margin, we got our selling expenses, general and admin expenses, and depreciation expenses. So this gives us income or loss from operations. So now the activities and all the transactions, all the incomes, expenses related to the core operations of my business are completed. Okay, is it clear? Any doubts till here? All right, so I guess you don't have any doubts, so I will be moving on. So now comes the part of other revenues and gains. Now what are the other revenues and gains? These are interest revenue, gain on sale on available for sale securities, other revenues, it could be gain on sale of trading securities, anything. Okay, any realized revenues and gains that are not related to the core operations will go in other revenues and gains. Similarly, for other expenses and losses, it's going to be interest expense, loss on sale, restructuring expense. Now what is restructuring expense? Let's say I have a Lala business. What is a Lala business? Lala business is a traditional way of doing a business. Okay, so we have certain employees and I have a small shop. I sell certain goods on that shop. Now I want to go ahead and make it $1 million company. So that will require certain restructuring expense. So I have hired Bain or I've hired BCG to help me do that, right? So they will say ki, okay, hire a CFO, hire a person who is handling your operations, particularly make certain divisions. So all of this, of course, will incur additional expenses. So all of these expenses will go into restructuring expense. Is it clear to all of you? What is a restructuring expense? Okay, it's clear, right? So let's move ahead. So now after we have so the last step, in the last step I got my income or loss from operations. I added all the revenues and gains. I subtracted all the expenses and losses. Now I have received the income before income tax. All right, now after this income, so like I have received the income before income tax. Now I'm going to deduct the income tax expense and then I'll get income from continuing operations. My ultimate aim of this entire statement, right? Now this income from continuing operations, then there is a segment known as income from discontinuing operations net of tax. Now what is this? Let's talk about it. See, let's say I have a company named Manvi Utensils Incorporation. All right, so I deal in bottles and I deal in tiffin. So tiffin, my department, my segment of tiffin is doing very good. It's doing excellent. But my segment of bottles, it's not doing so well, right? It's actually incurring losses. So when now in current year, let's say today my board sits and decides that we are going to discontinue the bottle segment in order to be 100% profitable, and we don't want to incur any more losses from this segment. Now the moment the board decides that okay, this segment is going to be held for sale, so we start reporting all of the operations happening in this segment under discontinuing operations. And you have to keep in mind that whatever decision that board has taken, it has to be a strategic shift. It has to be a major strategic shift. All right, so that when it is a major strategic shift and the board decides to discontinue that segment, we are going to treat it, we are going to start reporting it under discontinued operations, and the segment that is continuing, it will be reported under income from continuing operations. So whatever things we just saw, all of it was reporting of income from continuing operations. Now let's talk about discontinued operations. So firstly, it says net of tax. Here also we read this line that it says net of tax. Why is it saying net of tax? Let's see. Whatever containing income from containing operations we got, we deducted the tax expense, right? But when it comes to discontinued operations, it could result in losses also, and it could result in income also, but tax has to be deducted from it, right? So that's why we don't have a separate column to show the tax expense for our discontinued operations, but we directly reported net of tax. How? Let's say there is a loss of $50. Now I am going to deduct 50% tax from it, and now the net loss that I'm going to show in my income statement, it is $25. Is it clear to you all? Okay. Now, next, what all is reported under discontinued operations? So when do we start? Whenever it has been disposed of and whenever it has been classified as held for sale. Sometimes we take up we have offers for certain segments, so instead of reporting directly into the discontinued reporting it as held for sale, we directly sell it off. So we are going to report it under discontinued operations when it is either disposed of or it is classified as held for sale, right? Now let's see what are the types of items that are included in the results of discontinued operations. Now you guys tell me whether you agree or not. If I'm discontinuing any segment of my business, of course it's going to be incurring losses, or it's going to be incurring profits or break even that are not sufficient enough to be sustainable. Yes or no? So there are going to be two types of things that I will be able to see. First is the loss from the operations, right, that has been happening in that discontinued segment. Second type of loss that I will be able to see is the loss of impairment. There will be an impairment loss for that business segment, for the value of that business segment. Since we have we have declared it as discontinued operations, it is very justified to have any impairment loss. Yes or no? Yes or no? So when it comes to impairment loss, first we have initial and subsequent impairment losses. Then we have okay, I'll tell you this. Let's say I had a initial, let's say I have a value of $100. Now I've recognized a loss of $20, right? So my current carrying value of my discontinued segment is $80. Now there is a subsequent increase in the fair value of my discontinued operation due to some reason, some changes in the economy or technology, something related, and there's a subsequent increase in the fair value of my discontinued segment. Now the increase is, let's say, $30. Is it possible for me to increase the $30 into $80? The answer is no. I'm going to only increase it up to $100. That is, I'm going to only increase $20 back, the amount that we had initially deducted, and we are going to get back our value as 20 plus 80, that is 100. Okay, so this is about the initial and the subsequent increase in the fair value, right? So where on the balance sheet date, at the year end, it is measured at fair value minus cost to sell, or the carrying value, whichever is lower, right? So let's take up a question so that you understand all the questions that you will come across in your CPA examination. Let's say I have a carrying value of a business segment, let's say $1,50,000, right? In year 1 I decide to dispose of this segment. Okay, so the loss from operations in this year is $50,000 and the impairment that I saw is $20,000. So initially I started with $1,50,000. Yes, then I'm going to reduce 50,000 from it and I'm going to reduce $20,000 from it. So I have a carrying value at the end of year 1 of $80,000. Now this segment is sold in March, okay, for $1 lakh. Now let's see that on this sale, did we incur a loss or did we got a gain? So I saw that there was an additional loss from operations from January to March. So what will I do? I will take up this 80,000. I'm going to reduce it by $4,000. So my carrying value comes out to be $76,000. And since I've sold this for 1 lakh, I have incurred a gain on sale for $24,000, right? So the amount that will go in my discontinued operation, it's going to be $24,000 minus $4,000. Okay, and let's say my income tax expense is 50% of this. So my net of tax discontinued operations will project this amount. This is the amount that I will post, this is the amount that I will post in my discontinued operations. Is it clear what has happened under discontinued operations? Yes, tell me. Is it clear whatever happened in... Okay, Charan says clear. Thank you, Charan. Alright, let's move ahead. So now you know all of the items in the multiple step income. So after getting my income from continuing operations, I'm going to report the income or loss from discontinued operations net of tax, and I will get my ultimate net income. Is the multiple step income statement clear to you all? Is it clear? Okay. Now let's see single step statement. After learning the multiple step income statement, single step income statement seems like a piece of cake, since what we are going to do here, we are going to take up all the revenue: sales revenue, service revenue, interest revenue. We are not doing any bifurcation as core operations, activity income and expenses related to core operations, or direct cost, indirect cost. No other. We are not going to do those bifurcations. We are just going to go ahead, take up all the revenues, then we are going to take up all the expenses. So after adding all the revenues, we are going to add all the expenses, and this includes our income tax expense as well. So we are going to take up take out a net amount that came out to be $50. Then we are going to add discontinued operations net of tax again, and we are going to get our net income. Is it clear? So in both the cases, in both the statements, we are going to get the same net income. See, $25 and $25. It's just a matter of presentation, but the widely spread used income statement is always multiple step income statement. Alright. This is as per US GAAP, and I come live at 10 p.m. and I will be talking and discussing the timing for it. So if you have any recommendation for the timing, please do comment down. Alright. Now the last topic for the day. I know a lot of you are a little tired, and see, this class is the base for your entire US cap, right? So it's important that you go through this entire class and learn all the basics, right? So let's come back here. So first is, what is comprehensive income? See, comprehensive income is the net income plus the other comprehensive income. So to understand the comprehensive income, we have to know what is net income and what is other comprehensive income. So this net income part we have done. Now our duty is to know about other comprehensive income, and for that I'm going to show you my Google screen. 1 second. Yes, I did not come in the last 2 days since it was a festival, so I was busy with my family. Okay, see, components of comprehensive income, and the resource that we are going to use is the website, the viewpoint of PwC. So it's a very good source to understand the US cap, right? So now let's come to the other comprehensive income. What are the components of other comprehensive income? See, firstly, I would like to tell you that there are 4 components that we cover majorly in other comprehensive income. First is your puffy. I call it the puffy method, and that's what I learned from the Beckers. So first one is the pension adjustment. So let's say you have any adjustments in the pension plans of the employees. Alright, so all of those adjustments will go in your other comprehensive income. Now why does it go in your other comprehensive income? I'll just show it to you. See, since it's not realized, pension plans are something that the company will incur as an expense in the future years, right? So it's not a realized expense, or it's not a realized gain. Hence, it is reported in other comprehensive income. The minute that expense or income is realized, we start reporting it under your net income. Okay, so I hope this pattern is understood. You have understood this pattern, that what is reported in OCI and what is reported in net income. So reporting entities should present each of the components of OCI income separately based on their nature. Now, so OCI consists of revenues, expenses, gains and losses to be included in comprehensive income, but it is excluded from net income. Why? Since this has not been realized. Okay, so these are some incomes and gains and expenses and losses that are not yet realized. If it becomes realized, that means we have incurred. It's for sure we are going to report it under net income, right? So first was the pension adjustments, like I told you. Second one is puffy. Puffy stands, second is U, that is unrealized gains and losses on cash flow hedges, unrealized gain and losses on net investment hedges, unrealized gains and losses on available for sale debt securities. Now what are these hedges? What is hedges? Let's say I have certain foreign currency, like I am dealing in some export-import business, right? So let's say I sell outside of USA. So when I'm selling outside of USA, I have a probability that the debtor, that person, my client, he will pay me later, right? Now there is a risk of loss in there, right? So there's a risk of loss that on the day the transaction is ultimately settled, I might receive less amount than what is prescribed. So what I do, I go ahead in the bank, I tell that okay, I want to apply for a hedge. Okay, this is known as cash flow hedge. So I want to apply for a hedge. Now what will hedge do? Let's say on the settlement day, I on the contract day, the amount that I have to get is $100, right? On the balance sheet day, the amount that not on the balance sheet day, on the settlement day, there's a possibility that I might get only $95. Now I don't want that risk. Okay, I don't want to take that risk. I go to the bank, I say that let's settle at 98, let's create a hedge for 98. If you'll get 100, the extra $2 is yours. If you get 95, the less $3, that is also your risk. Okay, so this is known as a hedge, right? So I hope what is hedge is clear to you. So these are known as hedges. So there might be some fluctuations on the balance sheet. So all of the unrealized gains and losses related to these hedges and related to the available for sale debt securities. What are available for sale debt securities? Basically, let's say I've purchased debt securities from the market. Now there are three types of debt securities. First is trading, second is available for sale debt securities, and third is your held to maturity security. So if you are not trading in that security, but also you don't plan to hold that security up till its maturity, all right? So you are planning to sell it in 1 or 2 years, but not until its maturity. So we call it as available for sale debt securities, right? So all the unrealized gains and losses due to changes in its fair value at the year end, we report it under other comprehensive income, right? Is it clear? So we have done puffy pension, the pension plans, changes in pension plans, changes in your unrealized incomes and gains, incomes and losses. Then third one is changes in foreign currency translation. Now the example that I just gave you, that is that is your cash flow hedges. Okay, it's not your foreign currency transactions. Foreign currency transaction is different. Here we are not taking up we are not taking the risk. The bank is taking the risk. So in foreign currency transaction, let's say today I have contracted to make a sale, all right? Now on the balance sheet date, I see that the the dollar value has fallen down. So I have incurred a loss. And on the settlement day, my loss has been reduced by $2. So all of these things I will report where? I will report all of these transactions in my net income. So you need to understand that there is a difference between foreign currency transaction and foreign currency translation. What is foreign currency translation? See, foreign currency translation comes into picture when a US company has a lot of subsidiaries. Okay, so or let's say US company is a subsidiary and its parent company is in some other area. But usually all the cases that you will see is that the US has the parent company, and the subsidiaries are in some other countries. So let's take up an example. Our company is in US, its subsidiary is in India, and the subsidiary of my subsidiary is in, let's say, UK. Okay, so there are three different gaps that are being applied, that is IFRS, Indian GAAP, and your US GAAP. So there are three of these gaps So in the translation, in the process of translation of the financial statements from one country to another country, first thing that will come into picture is the differences in the gaps. So second difference that will come is the foreign currency. Alright, the basis of the foreign currency. So when we are converting from one foreign currency to another, of course there's a tendency that you will see certain differences. So these are known as foreign currency translations. Okay, these are known as foreign currency translations. So this was the third element of our other comprehensive income. And last is the fourth one, that is your fourth was interest-free credit losses. So basically there are certain credit risks that your interest income is subject to. All right. So 1 second, let me just take up some examples. Let me just see the live chat box if there are some questions. What is the meaning of derivatives under qualifying cash flows hedge? See, derivatives are certain values and structures that help you derive the value of that cash flow hedges. Okay, so these are known as the derivatives. Okay. So yeah, so the last one is instrument specific credit risk. See, there are some, like in easy words, every person has their own credit score. I'm just giving you an example. Every person have their own credit score. Now let's say you had taken a loan and after a point the credit score changes, due to which your let's say interest expense or your maturity value that you have to pay, that changes. Okay, so that is where your instrument specific credit risk comes into picture. Alright, so this is just an example. Here we are talking about the instrument specific credit risk. Let's say you have made certain investments or something. So there's a possibility that because of your own credit risk adjustments, the instrument is also affected, but it is not yet affected until its maturity. Okay, so these are some technical things that you have come across under other comprehensive income, but I hope you understand the baseline that until and unless any income or losses are realized, it will be reported under other comprehensive income, and the moment it is realized, we will start reporting it under net income. Okay, so let's come back here to our Excel file. Right, so when we add all of our other comprehensive income, we get an accumulated other comprehensive income. So when AOCI is added to net income, we get our comprehensive income. Is it clear how did we calculate our comprehensive income? Is this clear to you all? Yes, tell me. Okay, now let's come and see the types of comprehensive income statement. It's a very easy one. So first is single step, where after calculating your net income, there only you start reporting other comprehensive income. This is also reported net of income tax. Alright, so let's say there's an unrealized holding gain, so you report that net of tax. Foreign currency items net of tax, then you get your total other comprehensive income, add your net income of 12 lakhs with your other comprehensive income of 157,500, and you get your comprehensive income. So first is single step, second one is two step, that is you have calculated your net income in your statement of operations using multiple step. Now what we'll do, you will create another statement of comprehensive income where you will see net income you will take up the net income from your statement of operations. You will add all the OCI, other comprehensive income net of tax, and then you will get your comprehensive income of 1357,500. Okay, so these are the two types of comprehensive income. Now since it's my class and of course we are going to see some practical examples also, let me take up and show you that one second. Let me show you the financials of this company, and I'll give you an example also that how is single steps income statement really used. Okay, we are going to see that. Let's just see. I'll just share my screen with you all. One second. Dana Incorporation. Now I want to access the 10K report, annual report. Financial statements, and here is it, statement of operations. Now just observe, give it a look and tell me whether this is a single step statement or a multiple step statement. Yes, tell me. Is it a single step statement or a multiple step statement? COC Gaming, why are we reporting OCI instead of showing under net? I just told you, in your net income you'll always show the realized income. We are following the accrual basis of accounting, and until and unless let's say we take up an example of a security, until and unless you actually go out and sell it in the market, how can you incur losses and gains, right? Hence that is called as unrealized, and we show it under other comprehensive income. Okay, and when we go ahead and sell that available for sale debt security, then we are going to report it under net income. Now tell me, this statement of operations, is it a single step statement or a multiple step statement? Try guys. Come on guys. See, this is an example of a single step income statement. Why? Here you are not able to see what is your gross margin. You're not able to see what is your income from operations. You're not able to see a separate bifurcation for your income from continuing operations. So Shifa, no, Abhay is correct. It is a single step income statement. Hence, why? Because all the interest, income, expense, everything is reported all together, and we have a net amount of net income or loss. Hence, this is a single step income statement. Alright, now let's move ahead and see another statement. We have Abhay. Abhay was the first one to answer. So let's see if we have a company with Abhay's initial. Abhay. ABH. Okay. Let's take up Shifa's initial if we are able to find it. Shif. Okay. Let's say the 10K annual report. Let's go ahead and find the financial statements. So this is the statement of operations. Okay, great. So Shifa, your initial has given us the correct example for, yeah, okay, 1 second. Yes. So this is a multiple step income statement. Why? We can see our net sales. We can see a gross profit. We can see our total operating loss. We can see loss from continuing operations. We can see your income and loss from discontinued operations also in this example. So this is a perfect example to understand your statement of operations. Is it clear? How does these statements look? If OCI is shown separately, then it is a single step. See Charan, when an OCI will always be shown separately from your net income. First type of statement is your single step income statement, where after calculating your net income, then and there only you report your OCI. Second type is two-step comprehensive income statement. In this, you just take up the net income, you add all the OCI, and then you get your comprehensive income. Is it clear? Is it clear? Yes or no? How did you find the today's class? Okay, yes, crystal clear, I assume. Amazing. How did you find today's class? Please do comment down. I tell you to do so in every class, but I guess most of you forget. It's okay. So please take out just 1 second, 2 seconds of your life and just comment down so that this video reaches too many people. Alright, so do you have any doubts or anything? If you have any doubts, you can go ahead and ask me in the comment section. I will reply to you all. Alright, so I'm going to end this stream right now. Take care and good luck. Bye. I hope you enjoyed your class. Bye bye.